you want to take a look at the stock indexes, the gold and silver, whatever you want, I'm here for you. So let's look at, see if I have anything in the chat so far now. I think EGO must be a stock unless it's eggs, which which is a very thin market. It actually is a market, but I'll just see if anybody has this. I've got the S&P up here, and when you if you do give me a something that you want to see, um, Dan, I'm into commodities, so you would have to. And if that's the letters for a commodity, I don't recognize them. Each platform's a little bit different, so just kind of spell out which commodity you're looking for. That trade that you saw today with that almost $500 gain was on copper. I'll show you that trade a little bit later if you want. But if anybody is interested in having me look at a specific commodity, I can do that right
There have
now
been a lot
for
of
you.
people interested in gold today. So if
All
you
right,
want to start
let's
with
take a
that.
look at gold. I think I have that. This is the micro gold, which I've been trading. Okay, I'm going to eliminate that so I can see. When I make these analysis, I really do want to talk about how I view, how you may want to start viewing what I call edges in a uh, you want to add up the edges, the advantages to you in a position before you take them. This is, of course, the 5 minute. Let's look at the, unless you stop me and tell me you're a day trader, I will look at, which I am, I'll concentrate on the daily chart. Dave had a form of this up before. What I like to do is I like to have a long-term moving average and a short-term moving average. Um, and because one of the basic tenets of trading is that if the short-term moving average, especially if you're a day trader, the short-term moving average can signal a direction and then it's a sustained direction. Um, the the long-term moving average is more of a baseline, and if you move too far from the long-term moving average, which in this case is the white, then you can look for a snapback. When it gets extreme like this, this becomes normal. This distance, even though it is a large distance, this becomes the normal. And once you start to accelerate from there, you can expect the snapback. So, of course, you had a pretty good signal here. Things were going to snap back, but once you're up here in your trading, you really want to look to eliminate your position if you haven't already on the way up. Um, I believe there is plenty of room left to the upside of the gold market. Uh, I, I say this by my experience in the gold market. I want to show you something that I find very interesting that you can use for yourself in your own analysis. And I'm going to use it here, and I'm going to show you what I expect. You see this accumulation here? This is a quite a lengthy accumulation. This came all the way from April all the way to September. When you see an accumulation like this, and you can, it also features the moving averages being very close. The fact that they cross, it's really hard to take a cross as a signal when you're looking at action like this. Same tops, similar bottoms. When you see an accumulation like this, what I like to do, what we used to do when we had Dave, you're not old enough, but I've mentioned this in a couple of my presentations. We used to get very oversized charts in the mail on Saturday morning somehow, and it was on very thin paper. Had all of the daily charts of all the commodities on it, and we take it and put it out on my desk, and then I would work with literally a straight edge and a pencil, and start to mark up my daily charts. This is before the advent of computers taking over. This was in the 1980s and even in the early 90s. And what I did was I would take a look at a accumulation like this, and I would wait for a breakout. Once you start exceeding this area, you always ask, I wonder how far this is going to go. So what I do is I take my protractor, and if you remember a protractor, it's got a pin on one end and a pencil on the other. I put the pin at the end of the accumulation, and I open my compass. I'm sorry, not a protractor, but a compass, and I put it at the beginning of the accumulation. And then I leave the pin where it is and then rotate the pencil. I draw my arc, and it comes up way above here in this example. But I think you can see that if I took this horizontal line and made it vertical, which I'm doing by that procedure I just named to you, I'm going to come out a little bit higher than here. That's not really why I believe there's more to come. There's other fundamental reasons, and I'm just looking for the chart to confirm that. But if you see this kind of a long accumulation, you can expect a very reasonably powerful movement to the upside, and we got that. I think it looks like we've got about 70% of that move, which is really usually where I take profits. You got to look for a trigger. If you don't have a trigger on any of the crosses like this, then you look for a breakout of the accumulation. So I think this is, it's a lesson that, and I also want to say that when a lot of traders look for things to be overbought, and they start getting very nervous when you're looking at over 70 and 80 in the RSI. I use this really for position sizing, which is something that we can have another discussion about. But I think position sizing really is the lost art that really most of the professional traders that I trained under made it a priority. So I do, and I talk to when I train traders. In any event, a market can easily stay in this high range like this and give you this kind of power. So it doesn't this does not necessarily mean when you're spending when you're spending areas in the 665, 70, 75, 80, even 85 at one point, that this does not mean that we're overbought. Yeah, we're overbought, but sometimes factors of the market are depending on it. Are not dependent on looking at this. It's just showing you the power. In any event, so again, a couple of the lessons here, and some of the is look for the long accumulation, extend that up with your compass, and you can get a pretty good. I usually I don't ask for everything. I ask for 60 or 75% of this move. Those are my expectations, and you can see in the shorter term moving average, this particular one is the 8-bar exponential moving average, and I like it. It's called the golden mean. I use it. I use the 8, the 9, the 10, and what happens is I look for consecutive closes under this golden mean, and you see we didn't get any with that just that rule. You would have been in on this entire, and you would have been in on this entire down move if you were short. This is actually one of our loaded gun signals to go long, and we take a look at this particular the size of the candle, and we take our scalp here. Part of what I train, especially if you're a prop trader, is to have a scalp mechanism in your trading as well as a runner. So if you scalp this, you'd probably be taking your scalp right here, and then your runner would remain for the big money. In any event, that is, I want to show you this chart. Am I expecting more? Yes, I am. The 8 is still above the 34. In this particular case, is the 50 or the 34. It's the 34. And what I'm looking at here is a retracement, and then again a squeeze. I love these squeezes. When you get a takeoff from a squeeze, it usually lasts at least enough for your scalp. So in any event, I do expect at least a test to the high and more because of other considerations besides what I'm seeing in this chart. Yeah, you can say we have a double top forming, but unless we break the 50, which is not here, I'm not convinced. Power usually gets met by power, and you can see how it's coming now on the long-term moving average and starting to accumulate again. Now, if this extends a little bit more, I'll be taking that sideways movement and taking my compass and seeing how the minimum that I believe it's going to happen. So I think we've got more ground in the metals markets, and I think this is really, really a healthy retraction. It's true of the silver market too. I think I have silver up here. Yeah, silver market probably looks pretty much the same. Yeah, it looks very much the same. And again, not breaking the long term, spending some time in the squeeze, which is really where you want to see an accumulation. And now this accumulation would have been from here to here. Your protractor or your compass would have been here, pencil here, and again, you got a pretty good accurate move there. So listen, when gold goes, listen, I've seen $50 silver back in 1980. So so this is not a tremendous price. The silver could easily go to $100. So we'll talk about that at some other time. All right, let's see if I've got any other symbols. Platinum, copper. I'm glad you mentioned copper. I'll show you the trade that made me my $500 today. Let's look at copper. I'm sure I had it in here already. Yeah, here it is. HG, high grade. It stands for. This move right here was when the tariffs were named on copper, and we've been struggling to get higher ever since. This is this of course is the daily chart in copper. Are you the one whoever asked me for copper? Are you a day trader, or are you just somebody who is in the metals business? I love platinum, incidentally. I have to be a little careful because of the don't have a thank on shot. Okay, you're a day trader. Good. Then I will show you the trade today. But you can see this accumulation right here. Again, I'm always looking for these accumulations and projecting higher. Now this, this looks like it could have gone much higher, but this is about 70% of this movement right here on the long side. This is very damaging to a chart, as you can see. But there's no reason why we can't go higher or lower. But the idea is that, and I think if you ask Dave, the Landry before me, he would talk about these kinds of gaps and the fact that they would be closed on a technical basis. But I'm looking at an accumulation here. I think if it breaks up, I would be taking this and moving higher, and if it happened anywhere in the near term, that would be an edge that I would have. Also, it would also be a match for if you took this distance and put it north, you'd be matching this high, and a test of the high is a usual technical occurrence. Let's look at the 5-minute. What chart? What time frame do you trade, Mr. Copper? And I will check out what you say to me. The 5-minute, exactly what I was trading today. Love the 5-minute. Gives me time to kind of do other things while I'm waiting for market to close. This is a loaded gun signal right here, and you can see how well it does. If you don't own loaded gun, or I'm sure you've heard of it. If you haven't, David will put my email there. You can write me. I can send you information on it. But here is, you can see what happens when you start to hug an 8-bar. This is still an 8 right here. I'm looking for consecutive closes over the 8. Here's one. Here's another. There's no 2 consecutive closes all the way down to here. Now, I didn't take it all the way down to here. I was only trading today from about 10 o'clock to 12, and since 12 o'clock came here, I took my first reasonable exit out. I was out here. Actually, I got in here. This right here, I'm going to call it. It's an engulfing pattern, and it's almost a total engulfing pattern. Here's a tip for you: if you're not giving full credit to this as a total engulfing, and you probably shouldn't because it isn't. If you have a miss as far as the engulfing part is concerned, it should be in a short trade or in a southerly movement. It should be at the top. In other words, the fact that it engulfed the bottom of the previous candle gives it much more credibility in my world. So, and when you see an engulfing pattern as a continuation of a trend, very, very powerful. One of the most powerful things that can happen for you. Here's where I took my trade, and it didn't take long. I actually I put on 2 copper positions, and I always take one out in the scalp. Took it out here at the test of this, and then continued lower. Here's where I got out. This is actually a reversal of a loaded gun signal, but we don't take it because it's against the long-term average, the long-term whatever we're using for the protection for the longer term. So in this particular case, if I had time, I probably would have stayed in here waiting for two closes below, but I needed to at least prepare and take a look at some other charts in case I was asked. And so I got out here. And again, I only was trading from 10 to 12, and I was already past my time. You know, I don't get out just between, I get out at the next possible opportunity if I'm trading within a time frame. So this was a nice trade, resulted in almost $500 in profit in a $50,000 PA account with Apex. So and you know, that was a nice day. I didn't want to get, I have a trade copier. I don't use it probably as much as I should. In any event, but that's the copper. What do I see in copper? Copper is a terrific market to be trading right now. Although it's a fairly large contract, and I always I demand of myself in most situations, and I demand or I suggest to my clients that they consider taking two contracts with every prop trading approach every time they get into a market. The first one is to grab the low-hanging fruit so that you can have your padding from the red line. And the second one is, hey, let's build it as much as we can and use a trailing stop. In this particular case, I was trailing this above, after 12 o'clock, I was just trailing it above the 8-bar exponential moving average. That's why I got knocked out here. So there's a number of ways I like to teach to trade and how to preserve a long gain. Yeah, because you say, geez, I've got so much here. I hate to lose it. Should I take it? But this could be a big trend. And of course, when you take it, you as I did, you have all this. I say, hey, I'm a gifting person. Let somebody else have the rest. I have no problem with that. The idea is that as a prop trader, what I did was I just took $500 and I padded that. Now I have a full 2,500 distance in that account. Actually, this particular account has passed 52.6, so I've been getting paid on this account, but on a particular funded account I traded today. But in any event, my point is that if you're in the eval stage or in the funded stage, you want to keep your distance from the red line. I always talk about how that should be your main focus. All right, let me look at the chat, see if we have any other. Okay, that's me. Do you trade anything else, Kumar? I think I saw something else, the platinum. Let's take a look at the platinum, which was really where 2 months ago, I remember how much I loved platinum. Here it is right here. So I guess I was taking again, look at this. I mean, not only did it not break the 8, but it wasn't even close. And it wouldn't have knocked me out, you know, if I took this. But look at this move. I agree to some degree with Dave, who mentions the fact that he prefers the long. I think there's a lot more opportunities on the long as far as you know, getting yourself into trades and making money. The thing about the short trade is that you know, it took all this time to get this far, and in half the time you got this far. So it's just quicker because most people are really afraid of the downside, and so they get out precipitously. But look here, look at this accumulation. Look at this accumulation, protractor or compass. You would have had at least here. If you took it a little longer, you would have had most of all of this. So you can kind of get a feel. I think a pretty darn good feel on these accumulations. Where do I think this is going? I think let's look at the platinum on the daily chart. Platinum made its most dramatic move, had the most dramatic move of all of them. This move right here was a 70% move or a 40% move. I think it was from, well, I think it went from 1,000 to 1,700. But this was the original one that I saw, and what I quote a lot, that this is a 40% move from around 1,000 all the way to over 1,400. Then you had this accumulation, okay? You can go ahead and measure this accumulation. And when it broke out up here, where is it going? Take this distance, put it north, and you pretty much got a nice estimation there. So Kumar, you can, yeah, use it. You're going to see. So where do I think it's going? I think it's going to continue higher. I mean, yes, we're on the wrong side. We got a cross here on the daily. Not excited about that, but again, I have been many times. You'll check past breakouts and what have you. So I use the daily chart tomorrow to give me the undertow for the daily shorter term chart. In other words, right now, if I was trading the platinum, and I have no favor right now. It can go higher, it can go lower. There's a question mark here. Come on, you can hope it goes higher. From my experience, I believe it can go higher, and I should go higher. But I'm not putting any money on that. So when I go to my shorter term charts to trade, I'm not favoring the long side or the short side. Now, during this period of time, when this thing was starting to really rock and roll, I'm saying to myself, I'm favoring the long side, meaning that when I take a shorter term trade, instead of when I have I still go short or long. It's not exclusively long when I see something like this, but I will take on an extra contract instead of two platinums. Maybe I'll take on three. On the long side. So I'm giving myself an edge by recognizing the undertow of the daily chart, and I bring that knowledge to the shorter term chart. So that's something I want to mention. But here's a pretty good example of watching an accumulation and watching it go. Here's a loaded gun signal that would have got a nice scalp, another loaded gun signal here that would have gotten a nice scalp plus a run. And this is a loaded gun signal. You would have been in all of these. They all look a little bit different. I can teach you what they are. But I use this for position sizing. I'm not sure there's any lesson here, as this is a daily chart. There are a lot of people that trade the 2-minute, and here's another loaded gun signal that gave you the 2-minute. But look, you've got the same profit in a 2-minute with a lot less risk than you got in the 5-minute, but you can get shaken out. So there's always a positive and a negative on anything that you do. When you get the 2-minute charts, if you're somebody who lacks patience, I think you're going to want to work with a 2-minute instead of a 5-minute if you're just dying to get into trades. If you're somebody that waits for the close on a candle before they do anything, and you use a 5-minute chart, you literally have 4 minutes to go out and have a cup of coffee and come back, because you're not doing anything. You've got your stops in and your limits in. You're not doing anything but letting the market move in your direction. But after 4 minutes, when the 5-minute candle is about to close, you can then have a minute to take a look at where you are and shift things around. But look at this trade here, fabulous. Okay. Do we have any other questions or any other? The long term here, I use the 50. This is the 34. 34 is a Fibonacci number. Don't marry it, but in certain situations, I just happen to have it up today. Again, if you're not a loaded gun person, consider it. We've been doing very, very well. Our trading room has been up no less than $3,000 a month in a single $150,000 account every month since it started in April. Started in August, September, October, the first. I'm looking here. So yes, July, August, September, October, at least $3,000 in profit on a single $150,000 contract a month. The trading very conservatively in our room, but you can learn really how to win and what winning's all about. If you have any interest in our trading room, I'll give you a free 7 days to experience it. Just email me. You'll see Dave will put the email in the admin at the disciplintrader.com, and I'll give you 7 days free in the trading room, and you can see what winning is all about. So okay, we don't have much time. We have about 6 minutes. I could take a look at one last chart if you'd like me to. You can, Kamar, if you seem to be into this. Roban, you have some something going on. So if you've got something, I'll take a look at it. If not, let's see some of the things I was looking at today: gold, silver, copper. You're looking at all the things that I was looking at today. Let's just put that back. And I'm going to, if you don't ask me, since you're not asking me, I'm going to just show you the crude oil market. This has a nice half contract. I teach all my my loaded gun and my all the room people that the idea is that you really should. Now the room is run by a professional former floor trader and a member of the CBOT, Danny DeMaria, and his son. You're going to really enjoy it. So if you haven't really experienced a trading room that wins consistently and that honors losing trades and understands how to reply to them, that's the main. Besides it's just nice to see it winning all the time. I always say I love when Dan has a couple of losing trades and it does not phase him at all. He comes back and it becomes positive. That's kind of really what I'd like you to see in the room. But look at this. This is the crude oil market. The QM contract, that's what it is in Ninja Trader, but the QM contract is something that that's a half contract of the crude. Very, very good to be able to take a quick scalp here and then let it run. But you can see that now this is the 2-minute chart. Let's look at the 5 that I like to trade in this particular market. And let's see if we can pull that up. Maybe this is the 5. Is it just not? I guess that was the 5. This is the 2. But again, you can see that it keeps, as long as you're keeping your distance, you're in a pretty good shape. But you got to be careful. You don't want to, when you get this far, again, remember I said when you get too far from the whatever moving average, we've got several sets that we use that have tested better for different markets. Then this is the 2-minute. You're going to see some sort of a snapback. Is it a reason to get out? I think so. When you're dealing with prop trading, one of the things that I advise is when you get spikes like this and you move too far from these averages, go ahead and take it. Don't worry about it because you got another signal here to go short of what you would have gotten here. So there are a number of things that you need to do differently in prop trading to get paid consistently. I don't want you to just get paid. I want you to develop a long-term income through this. It's doable. You just have to treat the funded phase differently from the evaluation stage and then treat the long-term phase differently than when you first got paid. So I can show you how to do that. You can request the room, whatever you want to do, just write me if you want a free week to the room or you want to take a look at loaded gun, whatever you want to do, just let me know and I will make that happen for you. Okay, well, it looks like we've got a couple of minutes here. Let me unshare my screen and just see who is following me. Mish is following me. You're leaving your husband behind today. Come on. Mish, okay. I always, I think the last time I saw you, Mish, was in Las Vegas about 10 years ago.
Yeah, hi, Norm.
I think I stole a hug by the blackjack table, if I remember. Your husband was standing right there. Not that, we're about the same size, but we're 2 5'8" guys, So I knew I was in good stead. Anyway, really good to see your name here, Michelle. If you really want, I talked about being conservative. I would have to call you conservative, Mish. Would you call yourself conservative?
I think it depends. I think my risk management is conservative, but I will pretty much trade everything. So that could be considered to be, kind of a risk taker in essence. So I'll trade anything. I don't care about volatility, but I'll always do it with a risk parameter.
Yeah, because that's really what I remember most about you is how you keep tightening. I don't know if you do that in relationships or just the market, but I know you got a pretty tight relationship with your husband. Say hi for me, will you?
I will. Nice to see you, Norm.
Okay.